What is going on, everyone? Thank you for returning. We're back with another ExxonMobil stock review. What we're looking at currently is an overview of ExxonMobil as we take on new price action. So we're getting out of consolidation. We're going back into ranges that could possibly take us into or back into all-time highs. We took a dive in the fourth quarter. We received a price downgrade. All of those things happen, and ExxonMobil healthily, if that's even a word, reacted to the news, to the price stock. So you know that this stock has a pulse. You know that it's very in tune with its investors and market sentiment. So this is one of those stocks where if we receive news, it properly reacts to the news. If we receive price target upgrades or downgrades, it appropriately reacts to those upgrades and downgrades. So we have an earnings period coming up February the 2nd, which is Friday of this week. FOMC happened on January the 31st, which was a Wednesday, and the price of the stock reacted. It consolidated just like most of the market did based on the FOMC news. However, ExxonMobil is one of those stocks that it doesn't necessarily go with the overall flow of the market. It is one of those long-term investment plays that investors generally get into at the beginning of the year and exit in the fourth quarter. It's one of those investments that pay a significant amount of dividends per share. So anything, let's say under $100, which we have seen, is a steal. If a stock is paying you 95 cents a share, anything under $100, you're basically getting, a significant amount in return. 1% of your share comes back to you. And so that's pretty decent for a large company such as this one. If you can see, its financial position is a long-term buy, a long-term hold. Assets are significantly over liabilities. Shout out to my man Keenan Grace, who put that in perspective for me earlier today. Assets are significantly over the liabilities. The dividend history is strong. The payout ratio is 36.19%, which is very good in terms of like market standards and things like that, in my opinion, for my investment level. There are some stocks that pay more, but it's also based on your level of investment, where you are financially, et cetera, et cetera. So Exxon under $100 is definitely a steal, or was definitely a steal, even at the current price where it is of $103. You can dollar cost average in, and some brokers allow you to buy this stock on partial shares, such as Fidelity. So if you are interested in investing in this stock and you don't necessarily have $100 to invest, you can head over to Fidelity, open up a brokerage account, an individual brokerage account, a Roth account, and you can also invest into this stock, dollar cost averaging $25 a week, et cetera, et cetera. Of course, not financial advice, but this is some sound information that may help you along your journey. Exxon is one of those companies where it's not going anywhere. The earnings, the revenue, and those things like that will continue to grow as investors get in. So top of the year, first quarter, definitely something I would look into. Fourth quarter, we'll see 2024, how the stock price reacts to, end of the year sentiments, the holidays, and all of those other types of things. So as we go in, let's take a look at some price targets for Exxon, and then we'll flip back here and then come back to the charts. So as of right now, you can see that this stock received a price target upgrade from a lot of analysts, a lot of sources. They're a rating, they have about 100 ratings listed here on Benzinga. But if you take a look at some of the people who are involved, you have 21% increases. If you look at the current price compared to where it is now, $103, we have some 21% increases. Some rated to go down, but it's still an upgrade. I don't know how that's possible. But at the same time, if we let's go to the firm that I recognize from the price target downgrade, which is TD Cowen. And let's see, Jason Gableman, different analyst than the last person, But this particular firm stood out to me just because that was the first firm that I saw when the stock price was $112 that downgraded the stock, and then it created that particular sell-off into the 90s, low 90s, where again, this price was an absolute steal. Let me take a sip of my tea on that. All right, so Jason Gableman rated this stock at about $115 price target. As we can see, we see some 116, 118, 116 or 119, above 120, which was our all-time high, 122, 121, 147. So I like that. Obviously the investor in me loves to see high price targets. Obviously, not from all of the most trusted sources or anything of those natures, but listen, you can tell that there's bullish sentiment around the stock. If you look, even Wells Fargo, they have this stock rated at $127 to $130 in some instances. The rating and whatnot, it seems to be like overweight evaluations, as it says. But hey, look, you never know what investors may see. You never know what news may come out. You don't know what acquisitions and mergers and things like that are in the pipeline for a company like this who has billions of dollars to spend, who has 10 times more assets on their balance sheet than they do liabilities and debt. And the free float for this particular stock is in the billions. So there's tons of shares to go around, tons of shares, tons of partial shares, tons of opportunities to get in, tons of buying opportunities. If you have a price target in the 120s, then obviously at a price of $103, anything in the low 100s, you got yourself a great deal, a great buy. So with that said, let's flip over to the charts. Let's take a look at the price action that we were able to see since earlier this year. So let's go to where let's just start off where we started. So as you can see, 2024, we were in this range. 2024 began. We saw a high of $104.41. Let me just make sure that price is accurate. $104.55. And so where do we happen to be right now? A little bit over 104.55 we tapped, but due to FOMC, we consolidated back to $102.81. So again, consolidations, this is a daily chart, by the way. Consolidations are nothing to fear. Obviously, if you bought at the top, you always have to be careful. But prior to the FOMC, we saw all green candles, all 2-up candles, no reversals. One is a consolidation candle based on the strat. It's not a full reversal, obviously, because this candle did not close below the candle before it or prior to it. So the candle that you see here from FOMC did not close below the previous day's candle from Wednesday, Thursday. Okay, so from Tuesday, excuse me. So what we see now is just consolidation range. We came back to a level somewhere in the chop that we saw at the end of the year, fourth quarter, as you can see. A lot of chop. Let's move over slowly. Lots of consolidation here. Again, this is a daily chart. So you see lots of consolidation. You see lots of, indifference in terms of buying and selling. Top wicks, bottom wicks, selling pressure, consolidation, increasing, touching fair value gaps, testing them, being rejected off of them, creating sell-offs, and, generally staying within a range of $95 to $105. So that's a $10 range that we've seen for about 3 months. And now where we are, we've almost got a complete reversal out of that range. Again, the significance of 104.55 comes from the beginning of the year. We most likely have shorts there. We most likely have people shorting that particular level. And so if we have enough buyers and enough bears to push us through that level, those shorts will have to be closed out. That's my thought process on this particular level. They're just people selling here. And there are people who are shorting it back to $100, $95. So again, what we saw and what we may continue to see based on the strat and price action are the 1-3 reversals. The 1-3 reversals determine consolidation and momentum. So one candles to me show a consolidation, inside bar, as you can see here. A 3 candle shows a range. That's an outside candle. So inside, outside. The 2s are the momentum candles based on the strat. The 2s take you up or they take you down. So in this case, you see a 2-1-3 reversal or just a 1-3 reversal. A 1 inside and a 3 formulates outside of that 1, which creates the 2s and the continuations. Now, the significance of this area is the news came out from TD Cowen that a price target upgrade happened to $115, and some people basically got back in. Took us up from a low of $95.60 to a high of $104 and let's just say 88 cents. But we're back into a consolidation range. Possibly we could stay inside for today, which is Thursday, February 1st. It's very early in the morning here. And tomorrow, which is ExxonMobil's earnings on February the 2nd. If we take a look at what they have for earnings, the estimate is 2.196 and the estimated revenue is about $90 billion. So this is for the period ending December 23rd, obviously bringing us up to the fourth quarter of 2023. And the earnings are set to drop Friday, February the 2nd. I don't think that they will have bad earnings, but in the event that they do, you can either look for more consolidation or a rejection from this level. So in my opinion, that short that's here would love a bad earnings and market sentiment to take us back down. This is the daily chart. If we break it down just a little bit and go into an hourly range, let me formulate this and reset the chart view. You can see on the hourly range, we have gaps. We've completed those gaps. So if a bad earnings possibly comes, this FOMC momentum can take us back into these gap areas between $102.30 and about $101.30. So just this dollar range here could be catastrophic with bad market sentiment for the stock and possibly lower than expected earnings. These levels are significant because these are the levels that has created momentum. I believe that Exxon ran into FOMC hot, and just the overall market, the overall market sentiment created a lot of sell-offs, just even in other indices, even in SPX, Google, Amazon. The big companies are out this week. So a lot of those companies have earnings this week, and the market is going to experience lots of volatility. So this is part of the volatility, ladies and gentlemen. Don't get faked out by all this stuff. Don't get psyched out by it. Protect your assets, protect your trades. Learn how to trade FOMC. Learn how to trade these big, huge earnings if that's what you do. If that's not what you do, hold your cash, sit out, invest in the underlying stock versus options and other things like that could kill, that could theta you out and kill your P&L and basically like one swoop, one move, news, momentum, all that type of stuff. So, you know, you got to learn how to trade volatility. A lot of people are volatility traders and they love it. You can see indicators like this taking you from a high to a consolidation, back to a consolidation area where we can see volume. You see ranges on an hourly consolidation. This is basically Monday. We consolidated, and then by Tuesday, market open, and Wednesday it took us up into another range. So now we're back. Thursday comes. Let's see what happens. Can we continue to go lower? Will we again chop here, complete a formation and go down back into this level based on earnings? Or could we see anything over this level with good earnings, with market sentiments? Will those shorts close out? Let's take a look on a weekly level and see where we are. So if we go to the weekly chart, you are here where my mouse is. And if you like, I can make a nice little drawing for you. Do I have the ability to do that? Yes, I do. So if I bring back all my drawings, this is what happens too. So you are here. I do have a lot of levels drawn out. I do have a lot of fibs drawn out. But again, this is one of the stocks that I trade the most. And so I'll explain it to you from here. Let's get out of that menu and see what's going on. Get back to my arrow. And on a weekly level, you can see the outside candle, the momentum that we received just from last week, just from that price target upgrade of last week. It took us in a $10, nearly a $10 range just on a weekly level. You are here where my box is. And what that tells you is that we have a long way to go just to get back to the ranges that were spoken about earlier in this video. So what I'm seeing now is more range, more time to get to where we need to get to. ExxonMobil is definitely one of those trades where it doesn't always move fast, but with momentum, we can definitely go and hit new price targets, new highs, and all those things rather quickly. So, you know, again, protect your trades, protect your investments. Don't fight the trend because the trend is generally here. The trend is mostly in. As you can see, this is a weekly chart. So from a weekly level, we almost completely reversed and took out 1, 2, 3, 4, 5, 6, 7 previous weeks. So in totality, we've almost taken out 7 weeks in just 1 week. So after earnings, you want to say if we open up a new week anywhere in the 104s, that basically informs a higher high. So 104.88 and above, we open up a new week on a higher high. If you know, and if we stay here, if we go to 105 or anything like that, then obviously if we open up above that next week, then that's a 2-up week. From this 3, a 2-up is not necessarily like a guarantee, but 3s in general create another 2 because it's the momentum is like phasing out. But we want to continue to see 2s, and then we want to see 1s, but we don't want to see any 2 downs or consolidations back into these low ranges. If I just zoom back a little bit, not even 7 weeks, and we go back to like third quarter, this is sort of when I started making videos, where my mouse is now. This is when I started making videos about Exxon. I became bullish, but we received that price target downgrade that took us down this trend line back into these ranges. But like I said, this week alone, we've created reversals in nearly the past 7 weeks altogether. Obviously, these wicks are here to the top, but I've seen this particular price this week touch 104.88. So, you know, if these wicks are, let's say, like 104.56, 104.23. We've technically taken out these weeks, but we just have consolidated back into this range based on FOMC. So now where we are is $102.81, where within these candle ranges, we're in the wick still. We're in the wicks, not on this one, but we're in the wick on this one. We're in the wick on this one. So we know that the volume here is going to outweigh most of the investors and the shorts that are in these levels and people shorting these levels, or just not investing at all. So our price target that we just noticed, or that we talked about in the beginning of the video, takes us to $115. So let's just say $115 is here. Where are we? In the fair value gap for a weekly sentiment. This is a bearish fair value gap that occurred from, basically the price target downgrade. This is a bearish fair value gap that took us from the highs, as you can see here, from 120, and we sold off from there. Some inside weeks, not inside in terms of one, but two down, a two up inside this candle. And then we just pretty much took it down back into low ranges. People sold off, made their Christmas money, made their money for the year. You take some people who have millions of dollars. A person takes $1 million and throws it into the stock at the beginning of this year. They make money on dividends. They make money on the price of the stock going up. They make money on volatility. They may sell high and buy low throughout the course of the year. So there's a lot of plays here if you have a significant amount of capital to use. So with that being said, we're at about 20 minutes. I don't want to make this video too long, but take a look at the price action. Look at the consolidation that we've seen from FOMC. Wait for earnings. As you can see, my fib levels here are providing some entries, and I could talk about this really quickly. And learning the strat and learning what optimal trade entries are. On the 30-minute level, you can see that I've created some fib levels for this. Now, where we are now is we're back into a trend from Monday, which is earlier this week. We've completed the formation, as you can see. And to me, ladies and gentlemen, this is very algorithmic, meaning this is not necessarily people trading. We're trading against computers. We're trading against algorithms, because the candlesticks and the chart formations and things like that are seemingly like too perfect. They fall on levels that I've drawn out from weeks and years before. 103.73 is a significant level. 104.08, as you can see, we form support and resistance here. 104.88. 103.10. I've seen this level in my dreams. I've seen this level in my sleep. This stock has hit this level so many times throughout the course of the trading day. You know where it is. You know if it takes it out. You know we're going down to another level, etc., etc. So mark these levels, guys. Sorry, I'm keep hitting my mic. Mark these levels because these levels are important. You see the sentiment here at 103.73. This is a big level. Buyers and sellers. So sellers want to take it down. Buyers want to take it up. Buyers want to take it up. Sellers want to take it down. Sellers want to take it down. Indecision terms of 50-50. Buyers took it up. Sellers want to take it down. Now you have catalysts like FOMC. This is a catalyst event right here. A stock with this type of momentum, only thing that could, in my opinion, take it out is a catalyst event. Bad news, bad price targets, earnings, FOMC, that type of stuff. So not to worry, again, play the charts, not your sentiment, not how you feel. Optimal trade entries at this level. We're here. Let's go back to this fib. Let's say 102.53. We're at 102.81. So optimal trade levels here, 102.53. You see my level at 102.41 as a support level or resistance level. If we break that, back to, this is a solid level for me, 102.05, but this level is tentative. Any level that I have and dashes for me is tentative. It's not necessarily something that I've seen play out over and over and over again. Red levels are very significant for me. I've seen them play out over and over again. Yellow levels are also significant for me, but not as significant as red levels, where things happen and things change. As you can see, at this level on the upside, things happen, but on the downside, blew right through it. So that's what I want to see, that type of confluence where chop, 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 103.73. On the downside, chop, 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 chop. So people would like to actually see this level flourish versus this level shot right through it. So there's not a lot of buyers at this level. If I'm thinking about it, if I'm correct me. Look, I don't care. We're here to all learn and collaborate. So like I said, not to keep it too long, I'm at 25 minutes right now. And so OTE entries again are based on trend. They're based on highs and lows. I'll go through this in another video or try to recommend another video in the future. But this is where we are right now. Got a catalyst event that took us back into earlier this week's range. We may chill here until the earnings play out. And then next week we get a fresh candle on a weekly basis. And let's see what we open up. So right now, take it easy. If you're trading this, look at what we're doing. Look at the charts. Play the charts. Play the charts. Play the charts. Play the news. Play the charts. You know what I'm saying? Don't get crazy. Don't play your sentiment. If you got things to do, if you're working and you're double multitasking and stuff like that, try not to do it on volatility days. Make sure you mark your calendars so you know when FOMC and all of those days come, because you could be in a trade and going up and then volatility happens and it kills your trade, and then you're jacked up. You might be averaging down and doing all those types of things that just further put you in a hole. When trading volatility, it can get crazy. FOMC, a lot of people straddle, which means that they take puts and calls. So whichever one goes up first, they sell that one. And then the second one, the remaining one, is usually the move that's going to happen. So whichever one, goes into premium first, that's the one that gets sold first. Then the second one is usually the one that'll go into premium, because that's going to be the significant move. So during FOMC today, we had a slight squeeze. The stock went up. This is where it happened. We had a slight squeeze. The stock went up. And then we chopped a little bit and we trended down. Back into earlier this week's OTE entry. Again, remember, 102.53 is the OTE range. And I believe this is like the 0.6 fib, 102.79 where we are. Let me take a step back real quick. Come on, be nice. Yeah, so we're in between the 0.5 fib and the 0.618 fib from earlier this week. So what that tells me is that we're still in a considerable range where we began. We just basically back where we started. And whoever jumped in this week and took us up has more or less got their profits, locked in their profits. They had a strategy. They had a plan. They're going to trade bullish into FOMC and then sell. That seems like an appropriate plan for me. But if you look at candles like this, shorter time frames can also say, like, we may get some daily participants, retail participants, etc., to bring us back up. So look, I like it. If you like it, I love it. Let's hide all my drawings and let's just go back to a blank chart. You can see the volatility. You can see the range, 95 to 105. We basically just cracked back into earlier this week's range. So let's see what we get. Play the charts, ladies and gentlemen. You can see what time it is. For me, it's 4:15 a.m. So I'm up grinding, trying to bring y'all some information that has been helpful to me over the years. I'm learning as I go. Shout out to the team over at ADEX Trades. Shout out to all the people that I learned from over the years as well. Shout out to everybody who's watching this video and whose ears that my voice falls on. So I appreciate y'all. Thank you very much for watching. It's your man YMe, and I'm out.